Hello listeners, and welcome to the second program in our 5-part series, which is Let's Learn Accounting, that was produced for grade 9 JSC learners and anybody else who has an interest in a subject. My name is Mr. Hanganini Levine-Wheeler, and today we will learn about accounting equation. Please be in possession of a pen and a notebook so that you can take notes during the lesson for important points. And don't forget to take part in the quiz at the end of the program. At the end of this program, you should be able to identify the effect of cash transactions on the accounting equation, which consists of 3 equations. Number 1, assets, which is equal to owner's equity plus liability. Number 2, owner's equity is equal to assets minus liability. And the third one, liability is equal to asset minus owner's equity.
Hey Mark, how was your weekend?
Hi Maurice. My weekend was awesome, productive and very educative. I visited my brother in Okahanja. He's an accountant at this other big private company. He asked me about what I wanted to do when I grow up, and I said I want to be an accountant just like him. He told me that in order to understand accounting more, I have to understand the basics, things like the accounting equation and some other things. I really learned a lot.
Oh, wow, that is amazing. I've also been reading so much about accounting these days.
Awesome. Okay, let's go to class now. It's almost time.
Good morning, class.
Good morning, sir.
Okay, I believe we all have a great and entertaining weekend. May we please take our seat? And let's start with our today's lesson. For today, we are going to look at the accounting equation. The accounting equation is also called the balance sheet equation. That presents the relationship between assets, liabilities, and owner's equity for a personal or a business use. It is the foundation of the double entry bookkeeping system. Since every business transaction affects at least 2 of a company's account, the accounting equation is always in balance, meaning the right side should always be equal to the left side. Are we clear?
So total assets are the same as the total amount owed to the owner and other people? Is that what you're saying, sir?
Yes, very correct, Maurice. Accounting equation consists of assets, which is equal to owner's equity plus liability. I believe we all know the accounting concept as we have defined them in a previous lesson. How does the accounting equation affect each of these terms we have defined above, which is assets is equal to owner's equity plus liability? Assets increase on the debit side and decrease on the credit side. Liabilities increase on the credit side and decrease on the debit side. But owner's equity consists of 2 accounts, which are called drawings and capital. Capital increase on the credit side and decrease on the debit side, while drawings increase on the debit side and decrease on the credit side. In our previous lesson, we spoke about drawings. Can you remember, guys?
Yes, sir.
Drawing has a negative balance on the owner's equity. Thus, drawing increase on the debit side and decrease on the credit side.
Ah, I see now, sir. So it is because the owner withdraws goods or money for personal use.
That's marvelous. Always remember the owner's equity is the amount of the resources supplied by the owner into the business. Owner's equity is equal to capital plus net profit less net loss less drawings. Remember, income and expenses has an effect on the owner's equity, which is income increase on the credit side and decrease on the debit side, while the expenses increase on the debit side and decrease on the credit side. Can anyone explain the effect of income and expenses on the owner's equity?
Me, sir, I think I can try. Income increases owner's equity and expenses decreases owner's equity. That is because expenses have a negative balance on the owner's equity and income has a positive balance on the owner's equity.
That's good, Maurice. Now, let's do an example. The introduction of capital. For instance, on the 1st December 2017, Mr. T. Dawson started a business and deposited 100,000 into a bank account open specially for that business. In every transaction, there are two accounts. For instance, in this term, it's capital and the bank. Bank increase and capital also increase.
Sir, I think this transaction will have an effect on the accounting equation. Since bank is an asset, that means bank will increase and owner's equity will increase because capital has been added to the business, increasing owner's equity.
Wonderful, Mark. Let's now assume there is a purchase of an asset by a debit card, which was paid on the 4th of December 2017. Or maybe it was paid through EFT. Like, for instance, Mr. T. Dawson buys a small shop just for $50, let me say, paid by the debit card or maybe through EFT. The effect on this transaction, on the accounting equation, is that cash at the bank, the money decreases because you swipe. And the new asset, which is the building that Mr. Tim bought, is also added. What are the two accounts involved?
So I think the two accounts involved are building and bank. Since a building is an asset and it increases the assets. However, the building was purchased by EFT, the assets will decrease because money is used to buy the building. This means building increases and the bank decreases.
Okay, I think some people might wonder what the EFT. Let me just elaborate there. EFT means electronic fund transfer. We may have a scenario like you purchase an asset and the incurring of a liability, whereby, for instance, on the 8th of December 2017, Mr. Dawson bought some goods for 10,000 from Mr. Richard and agrees to pay later, for instance, like even next week or something. The effect on this is that a new asset has bought, stock for goods is acquired, and liability for the good is created. Because you didn't buy this on cash, a person to whom money is owed for goods, in accounting language, we call that a creditor.
So, sir, the accounts involved here are stock and creditors. But when dealing with creditors, we use the name of the business. Hence, we have stock and Richard. And this will surely have an effect on the accounting equation, as stock will increase and creditor, who is Richard, will also increase.
Can you emphasize why do you think both stock and creditor will increase in this scenario?
Stock will increase because more goods are bought, so they came into the business, which will increase the assets that we have. And creditors will increase because we paid by credit, which means now we owe those people more money. Therefore, our liabilities have increased. That is how it's going to affect the accounting equation.
Job well done. What about the sales of goods on credit? For instance, on the 12th December 2017, we sold goods for 1,000 to Mason. Now, this money will be paid later. The two accounts involved are sales and debtor, which is, in this case, is Mason.
So I believe the effect on the accounting equation is that owner's equity will increase and the assets will increase. This is because income will increase owner's equity and owner's equity will increase in the accounting equation. The debtors will also increase because debtors are assets. They are current assets.
Awesome. Then there is a sales of an asset for an immediate payment. For instance, on the 15th December 2017, goods which cost 5,000 were sold to Walter for the same amount. Walter paid them immediately by EFT, which is deposited directly to the bank account.
So, sir, I want to try this one. So I think the two accounts involved are sales and bank. The effect on the accounting equation is that sales will increase, which means the owner's equity will increase in the accounting equation. And bank will also increase because money is coming into the business, which will therefore increase assets in the accounting equation.
Oh, that's good. The last one, the payment of a liability. On the 20th December 2017, Dawson pays an EFT of 5,000 to Richard as a part of payment of the amount that he owed.
Okay, so the two accounts involved are creditor, being Richard, and the bank. Richard, the creditor, will decrease because the amount of creditors has decreased because they've been paid off, which means the liabilities will also decrease in the accounting equation. The bank will decrease because we use the money to pay for creditor by EFT, which will decrease the assets in the accounting equation.
Well done, guys. Now that we have an understanding of accounting equation, now can we move on to the next chapter next time? So guys, can you just wrap up on what we studied today?
Okay, so today I learned a few things. The difference between fixed assets and current assets. That current assets have a short lifespan in the business, while fixed assets have a long lifespan in the business. Expenses have a negative balance on owner's equity. Owner's equity is the amount of resources supplied by the owner.
That is good, Mark. Well, sir, I've also learned that accounting equations consist of assets, which is equal to owner's equity plus liability. Lastly, I've also learned that the current liabilities are amounts due to be paid by creditors within 12 months. However, long-term liabilities can be paid over a period of years.
That's wonderful, guys. Now that brings us to the end of today's session. But before I dismiss you guys, here is the question that you may try out. The question is, stock is an example of which type of asset? Number 1, is it fixed asset? Number 2, is it a current asset? And the third one, is it a current liabilities? This program was written by Tatenda Ndawe. Until next time, goodbye. Sharp.
This program was brought to you by NAMCOL with funding from the Ministry of Education, Arts and Culture and the Commonwealth of Learning.